In this video, I want to explain how to profit much more and make sure our losers are as small and as less frequent as possible. Now, how many of you have been in a trade, it starts reversing on you, and you have to stop out of that position for a loss? You have to exit, you have to just accept the loss. Now, as soon as we exit for a loss, the trade starts working out in our favor, and we see how much profit we could be up if we were still in that position and we did not stop out. Now, this trick is going to help combat that because it's just tweaking a little mechanic in our system and in our trades, both entry and exits. That's going to enable us to make sure our risk is as small as possible and we're selling a position at the right price and the right point. Now, on my Instagram, I made a post on when to sell a position. I'll post a link in the description below if you do want to follow me on here at Ameritrade. I definitely recommend doing so. It's a great resource and you're missing out if you're not following it. But I posted about when we should sell a position. And this is very key. I see traders not doing this and they struggle severely. So no matter what market you trade, stocks, options, futures, crypto, Forex, before you enter a position, you must have a predetermined plan and a solid trading thesis. This is going to be the theme to this video. Now, what this looks like on the chart is if we're looking to buy or sell something, before we click the buy button to get into that position, we must know where our analysis is going to be incorrect, where it's going to be correct, where our target is, and where our stop loss is before we physically hit that buy button. On top of that, we must know why we are entering that position, and then we have a valid trade to be put on. Now, because of this is going to enable us to trade as systematically as possible and let the market do its thing. Everything that we try to control with the market is out of our control. Once we click that buy button, it's sitting back and reacting to what the market gives us. Everything else is noise. We must trust the plan and we must trust the process. If we try to control something that's uncontrollable, we're getting in the way of the process, and we're just going to let our emotions do the trading, and we're going to struggle. We're going to get out too early. We're going to stop out too late. We're going to get greedy. We're going to get fearful. Let the chart do the trading. You have to trust the process and follow the plan. So the common theme with this video is that there are two ways that I sell a position. This is the only way that I can exit my trade once I enter. The first one is if my target hits, and the second one is if my stop loss triggers. Everything else in between is noise. The market isn't going to move straight in our favor all the time. It's not going to go straight up 100 points, rally to our target like it's a miracle, like we want to do exactly what we expect. It's not going to happen all the time. In fact, bounces, pullbacks, consolidations, that's all completely normal. A lot of people, for example, let's just say we get long at demand, right? So we're long down here at demand and our target is supply. A lot of people are expecting, okay, I'm getting long down here. This thing is going to rally, what is this, 50 points in the next 20 minutes, and it's going to hit target. This is a perfect world, and my trade's going to work out perfectly. I can guarantee you the market is going to, basically, I look at it as like roadblocks. There's going to be detours. There's going to be some times that we can't look at the map because there's a road that's closed that we weren't aware of. It's the same thing with the market. There's going to be pullbacks. There's going to be consolidation periods. There's going to be bounces. It's all normal. But what I want you all to do is sell your position only if your target hits or if your stop loss triggers, and understand that the white space in between all of this is completely noise. It's going to cloud your judgment and it's going to make you make decisions based off of your emotions. Believe me. To understand this visually on the chart, let's go over some trading examples. Now, this was in the pre-market plan to understand the levels we were watching. I post these every single day before the market opens of zones I'm watching, levels I'm interested, and potential trading scenarios for Investitrade members. So NASDAQ had supply, as you can see here, this pink box at 11673, and we also had supply a little higher, and we had demand at 11458 and 11411, which are these boxes that I'm highlighting right now. I said it bounced prices before, and if we could bounce here, as long as I spot buying confirmation, I will be open to playing longs. So basically what this means on the NASDAQ from the plan is if the market could bounce off of these demand zones, pull this up here, I would be looking to target supply above. Now, just hypothetically speaking, let's say the market came up and we got proper buying confirmation around 9:45 when the market looked like this right here. So we're in long right here. We saw some strong buying on the tape. Our stop loss is the low. Our confirmations where we bounced off demand. Market leading equities were strong. We had strong buying on the tape and strong buying pressure on the volume subgraph. So now we have confirmation and we're looking to take the market long. Now there's two different positions that everybody is going to take. You have to know the type of trader that you are, and you have to know the type of trade that you're putting on. Are you scalping or are you trend trading? Now you must know this before you enter that position, and it depends per market condition and the environment that the market is currently in. If you are trend trading, you could have further out targets, and your stop loss you must adjust accordingly. If you are scalping, you must have a fast-paced mindset where your targets are somewhat close and your risk is even closer. So in this trade, let's just say from a scalper's perspective, we're hoping for, or let's just say from a trend trading perspective, we're hoping for a target to hit 11673. And in my opinion, that's a little far away. It's 300 points on VQs. But we're in long at the oval. Our stop loss is the low, and our target is this supply zone above. Now, this is where there's no right way to trade. It's all about what works for you and based off of your journal and your data. So I want you to ask yourselves, do you exit positions at your target and then the market keeps running? If you do, listen to what I'm going to say now. If you sell a position and your target hits and the market reverses at your target and you sold it at a great price, then you could still do this, but I recommend tweaking it a little bit. So if we tend to see, based off of our journal, we're leaving a lot of profits on the table, what I recommend doing is, okay, we're long here at demand, right? The market is not going to go up forever. As I said earlier, we're not in a perfect world. What people are going to see is, okay, I'm in long over here. I want this thing to go straight up, and I want it to rally right now, and I want to sell for a crazy gain. I want instant gratification. It's not going to happen. Like I said earlier, it's possible, but that's a perfect world, and we don't trade in a perfect world. What a lot of people, including myself, when I first started trading would do is I would see this, I would get in, and immediately the trade is not working in my favor. I enter, and then we start pulling back. In my head, my brain is going to try to protect me from the pain mentally that losing is going to bring. So now, if I had terrible emotional trading, I'm probably going to stop out of this position just off the sole fact that my analysis is not working out right away, and off the sole fact that the market is coming down below where I entered. But what I want you all to do and to understand is you must sell a position only if your target hits or your stop loss triggers. Write that on a note card, put it on your computer, write it on your desk. I don't care. This has helped me more than the times that it's not helped me. So then a lot of people will see this coming down. They stop out of the position. My stop loss at the low never triggered. I have absolutely no reason to get out of this trade. Then we start consolidating a little bit. This is a roadblock. This is a detour. I could stay on the path and slowly they're going to fix the detour and the market's going to go in my way and the road's going to be free and clear. Or I'm going to panic, turn around and go back home and miss out on a great opportunity because the market still is proving my analysis is not incorrect yet. Remember, my stop loss is where my analysis is incorrect, and my target is where my analysis is correct and where the market could possibly turn. Do not put your stop loss based on a dollar or a percent amount. It's always where your analysis is wrong on the charts. So, based off your journal, if you tend to notice you sell prematurely and the market continues to rip past your target, then do this. We consolidate. Okay, I'm trading options. Let's just say if you trade options, you want to sell into strength. You want to sell when there's volatility. That's how you get the most bang for your buck. So I actually pulled up the QQQ options here. And let's just say we bought at demand at $2.10. Let's see if I could actually zoom out a little bit so you can see it more. Pull up the options chart again. So my crosshairs are synced. We're in longs, the QQQ 280 calls at $2.08. Our target is, we kept it a little shallower at the next supply zone, a little bit lower. We sell into strength at $3.40. And in a matter of 40 minutes, we make a quick 60-70% on the position. But instead, because our journal tells us we sell a little too early, instead of selling full position, what we're going to do now is we are going to sell 90% of our position at target, 75% of our position, 50% of our position at our target, and have a second target above that price for a runner in case it wants to keep going higher. So then we sell some to the strength, then the market again pulls back, right? Remember what I said from the pre-market plan? Our final target was 11673, but we got new information before the market opened up from this consolidation period that a new supply zone formed before I even sent the plan out. This was a new zone that did form. Or after I sent the plan out, this was the new zone that formed. Then the market starts pulling back. And yeah, I'm not going to lie. This looked very bearish right here. We pulling back, lower lows, lower highs. But after I sell some of my position, what I'm going to do is I'm going to boost my stop loss a little higher to where my analysis now is not incorrect at the low, but maybe it's incorrect at the middle of this range, or it's incorrect at the bottom of this low right here. Because then we pull back, we consolidate even more, then we start rallying, and guess what happens? Now we're in 25% still of our position. We could sell at our final target, and this pullback is not being detrimental to our setup. It's all about managing the trade and selling at your target. Maybe it's a closer target, maybe it's your second target, maybe it's your first target, and selling, if it's correct, our analysis, and only selling when our stop loss triggers when our analysis is incorrect. To show you another point, here is the Apple pre-market plan. We had a key level at 137.29. It was my bull above, bear below line that I expected if we could hold this level and remain bid above it, I'm going to expect a strong ES and NQ for a move back into 142. So let's just say we played Apple calls. I actually have them pulled up here as well. Let's just say we played Apple calls when we double bottomed off of this zone and the market started, or actually on the first test we played long when the market looked like this. We hit our key level, we started bouncing, maybe we spotted something, but again, I'm just saying hypothetically right here. So now we're in Apple calls. The premiums were about $2, and a few seconds later on Apple, the market pulls back. A very emotional trader and a struggling one would see this pullback right here. If you can see it in my head in the way. They're going to start seeing red, and they're going to get out of this position. It happened to me. It still happens to traders that I see online all the time. They see red. It doesn't work out in their favor right away. They get out of the trade off the sole fact that it's coming down. Again, maybe your stop loss is at the low. You have absolutely no reason to be in this trade. And let's just say instead of our target was 142, our target was gap fill at 139.05. If we had this mentality of selling only when our stop triggers or your target hits, we would have been in this trade. A pullback would not have freaked us out, and we could have sold at the gap fill target for a very nice setup. The example that I just explained earlier, this is where it comes down to how you trade. For me, I'm okay with leaving money on the table as long as I follow my profit, or as long as I follow my plan. There's been many times that the market's rallied and I could have made an X amount of dollars more if I held. But I don't look at it like that because I could always re-enter. As long as I followed my plan, that's the only thing that matters. I could always re-enter. if I leave money on the table, I'm never going to buy at the low and I'm never going to sell at the high. If you think that way, you're going to struggle and you're going to force setups and you're going to try to become a perfect trader, and it's just going to mess you up mentally. So let's just say I sell at 139 as soon as it hits the gap fill. That was my plan. I entered down here, stop loss below the low, gap fill as target. Okay, I'm cool with it, right? But if you notice in your journal that you're giving up a lot of gains, especially on trending markets, if the market's balanced, again, like I said earlier, different conditions bring certain ways to trade. If the market's balanced, I'm selling full position at my target. And the first example that I showed you with holding a runner is completely irrelevant. If the market's balanced, I'm taking full profits off at my target. I'm not caring if it continues up. I only care like that if we're in a trending bullish or bearish market. And yeah, we hit close to 142 going into end of day, but I sold at my target. I left the rest on the table, followed my plan, and that's the only thing that matters. It's the only thing we could do as traders. Now, a losing trade that I took, now that I'm preaching all of this, sometimes we're humans and our emotions get in our way. And everything that I'm saying right now, I did the opposite of this setup on July 6th. So on the S&P 500, we had supply at 3843 and then 3858. And in the pre-market plan, I said it's expected to have a hard time breaking above, and I would not be surprised for a pullback down. So what happens was the market opened up, and I saw some heavy selling on the tape, and I got short when the market looked like this, stop loss above the high. And I was targeting 3820, which was actually a demand zone. I don't remember the exact time frame. That bounced price, I think it was right here, that bounced price multiple different times in the overnight session, 2 different times. So I'm short, stop loss above the high, expected this to be tough resistance. Market dips, starts working out, start pulling up a little bit, start consolidating, and what happens here? I get out of this position because I wasn't feeling it. I felt like it was an emotional decision because the market was very balanced and I was trading in an area that I told myself, and I even told members in the Discord, to be very cautious trading this. And yet I still entered this position because I wanted to make money, and I forced the setup when the things did not really all align in my favor. I got a couple confirmation points, but when the market's balanced, I'm very, very defensive, and I really wait for a lot of confirmation here. So I got short after I said I'm not going to get short. It's an emotional decision. And another emotional decision, I think it was just emotional decision off of emotional decision. And because I entered emotionally, I also exited prematurely and emotionally when the market looked like this, because I was expecting, it was a thought, not anything that the market's telling me other than myself telling myself it. I was expecting the market to come up, but market never told me that. It was myself that said it. And I got out of this position at 10 o'clock when the market looked like this. The whole point of this video, let me pull up my Instagram again. The whole point of this video, you sell at your stop loss or you sell at your target. Everything else is noise, and my emotions, my internal dialogue was noise. I got out of this trade for a very small loss, and guess what happened? The market rallied. Again, my stop loss at the high never triggered. If I followed this and I removed all the other noise, I would have had a nice setup. We pulled back and we dropped right into my target, the same demand zone that bounced price overnight. We hit it perfectly, and this would have been a beautiful setup from supply into this demand zone. It's a pink box for this example. And then we got a strong rally into FOMC. I'm human. I make mistakes. I took a solid losing trade on this that could have been avoided if I followed my plan and I did exactly what I'm telling you all to do in this video. So I hope this video helped. I hope it enables you to not make the mistakes that I made when I first started out. And I hope it enables you to become a better trader just by tweaking something and becoming aware mentally of a simple trick that will help you stay in trades longer and get in and out when you're supposed to be and not when you just think it's going to happen. If it did help, drop a like, Comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course. It comes with access to the Discord at no extra charge. Definitely take advantage of it. But peace out.